Good afternoon, everyone. As you can probably tell, first of all, my Hebrew is a very early stages, so I'm afraid I will be having to speak in English. First of all, just a big thank you to the organisers once again for allowing S&P Platts to present at this forum. I came last year and it was a huge honour to follow such fascinating speeches and presentations. Also, one thing I'd also point out at this early stage, it's also a nice contrast when coming from England, coming from Britain, which is a slightly reserved country, to come here where there is actual debate, very vociferous, occasionally quite heated debate as well, and that makes a nice contrast as well. I realise there's been a lot of focus, rightly so, on gas so far, given Leviathan, given Tamar as well. My focus very much is on oil. And I know we're moving into some oil presentations and discussion. Oil is still the most traded commodity in the world. Coffee is second, gas is third, and oil also is still very much the main reference price for a lot of gas contracts that exist in the marketplace. So what I plan to do just in the next 15 or 20 minutes is give an overview of what's happening in the oil markets. Have a look into the downstream markets. Obviously, Israel is a major, semi-major refining hub with two complex refineries here. So have a look at what's happening in those downstream markets, and then also have a look at the future and focus in on something that has been discussed a little bit earlier, which is the disruptive technology of electric cars and what that might mean in the years ahead in Israel, but also in the global markets. So just who we are. I know, most of the presentations, a lot of them obviously from government ministers, etc. But who we are at Platts, just very, very briefly, because we may not be familiar to everyone here in the audience. We're a financial publisher. Now, what does that mean? What it means here in Israel, at least, I'll give three examples of how our information is used here in Israel. So firstly, in the crude market, we heard from one of the refiners earlier, Paz Oil. We publish every day prices for various crude oils around the world. And as far as I know, at least, every barrel of crude oil, pretty much at least, that is imported into Israel will use a Platts price as the reference price. One reason, or one explanation of how our prices are used. In gasoline, the price here in Israel is regulated, the maximum retail price regulated by the government. That will use the Platts gasoline price that we publish every day. And finally, in jet fuel, pretty much, as far as I'm aware, every barrel of jet fuel that is used by airlines at Tel Aviv airport, back to London, back to wherever it might be, will use a Platts price as the reference price in jet fuel. So that's what we do. We publish prices. We do all sorts of other things as well. I thank the CEO from Delek earlier who had some Platts gas price information. So that's what we do as a company. We publish assessments that are widely used around the world in contracts. Final part about what we do, just to introduce us, we're part of Standard & Poor's, the biggest rating agency in the world. That's our parent company. And Platts is just a pretty small part of that organization. So oil prices, this is really just an overview right now in the last couple of years. Pretty familiar story of the trends in oil prices. There's really three trends, I would say. To the left there, this high oil price environment, roughly $110 a barrel for a number of years. And then prices fell very sharply. Production from Opec countries was increasing, production from Russia increasing. The goal there from OPEC and Russia was pretty much to remove, as best they can, the US shale oil industry from the marketplace. And then in 2016, November 2016, OPEC and Russia formed an agreement to cut production. So really a change in policy from those countries with the aim of increasing price, drawing down on oil stocks around the world. And as you can see there, at least to some extent, that's been successful, with prices now around $60, $65 a barrel just in the last few weeks. So just quickly on OPEC, this is their policy. The red line there is what was agreed in November 2016 in terms of restricting oil production from the OPEC countries to around 32.6 million barrels a day, which is roughly a third of total oil supply globally. And you can see there actual OPEC production substantially below the production ceiling that was set. So OPEC countries, and here are the lists, and I won't labor the point, but a lot of information here. But the compliance from these countries, the OPEC countries, has been very good, led by Saudi Arabia, which, as you can see there, is over-complying with its production quota, and Venezuela there also producing far less than the actual cap in production. So the OPEC strategy, at least combined with Russia at least, is having some impact in drawing down stocks. And also the other factor in the oil market that has been, again, touched upon earlier is the increasing role of the US in the oil markets. Here you'll see a list or a geographical representation of all of the countries here that the US is now exporting oil to on a regular basis. So more than 1 million barrels a day over last year of US exports all around the world. A lot of that to Asia, as you can see there, China, India, etc., but also a lot to Europe as well. As far as I'm aware, Israel hasn't, so far at least, imported US oil, US crude oil, but it certainly could happen. The grades coming out of America are not dissimilar to quite a lot of the grades of oil that are imported here by the two refining organizations. So that's the US, and really this is just really the next year, if you like, and how we see the demand picture in the next year. You can see here on the right, 2018, we're expecting another 2 million barrels a day of oil demand this year. Oil demand is very, very strong right now. All around the world, you can see a big chunk of that in Asia, which is forming a lot of the growth in oil demand around the world. But also Europe, the US are, again, growth areas for oil consumption. The fall in oil prices has boosted oil demand around the world, initially in gasoline in particular in America, a big boost of gasoline demand as prices fell and demand for gasoline in transport fleets grew. And this year, perhaps more demand in what we call middle distillates, so jet, diesel, gas oil. So demand very strong, but also this year we expect supply to be strong as well. Again, you can see there 2018, nearly 2 million barrels a day again of new extra oil supply coming on the market this year. And you can see that the big chunk of that coming on the market from America, from Canada, boosting supplies to the market, but also even the supply there coming online from the Middle East and OPEC countries, which is not crude oil, but is condensate, which is not classified as part of these OPEC cuts we've talked about. So where are prices heading? We're not necessarily really a forecasting company, but I've explained there's 2 million barrels a day of new oil demand this year, and there's pretty much 2 million barrels a day of oil supply coming on the market as well this year. Now, this is a slightly complicated graph in some ways, but this just shows part of Platts' forecast for Brent crude prices, the main reference price in blue there, over the next 2 years. And you can see it's still trading in a pretty narrow band of around $65, $75 a barrel. So a pretty narrow band in terms of where we expect oil prices to be in the next year or two. And this just gives you a different perspective on this. It was referred to in a previous presentation. There was a big conference last week in London, IP Week, and we host a forum there. So rather than our own forecast, this is the experts, if you like, and I know there's quite a lot of skepticism around the world of expert opinion, but this is what the so-called experts in the room and their projections of where Brent crude would be this time next year. So end of February next year, you can see there, again, $65, $75 a barrel is where the experts are predicting prices to be. So I think, just in terms of where oil prices are heading in the near term, there is no real expectation, at least, of prices reverting to that $110 barrel picture that we saw just 5-6 years ago. The impact and role of the US in the oil markets now means that there's a buffer in terms of a new supplier, a new swing supplier, if you like, into the marketplace. So just moving downstream, and as I said, clearly Israel has two refineries, fairly complex refineries as well, and this gives you an overview of the margin that refineries are achieving in the markets in the last 4 years. And the blue line there is what we call the Urals margin. So this is a sour crude, a crude similar, but not the same, similar to typically what at least one of the oil refineries here in Israel is buying. And margins, you can see from this graph, are very good. So profits for ORL, PAS in terms of their margin at least, very, very good in recent years. Again, this is following the global picture. Oil demand very good. And also a lot of refineries that compete to some extent with Israel across Europe have shut down in the last 5 or 6 years. So the oil industry in terms of the downstream sector, at least in Israel, performing very well. And this is just their own figures from the two companies here, from ORL and PAS. I'm sure there's slightly different methodology, so I'm not comparing necessarily like for like, but this is their own figures in terms of what margins the two refineries are producing here. And you can see very good figures, $8-9 a barrel in the first 9 months of last year. And a lot of this in part is down to those dynamics that I've talked about, but also these refineries, of course, modernized 7 or 8 years ago and put a lot of investment, a lot of money into upgrading these refineries to produce low sulfur fuels. And you can see the rewards from these refineries from those upgrades. Last thing really, before looking at the future and some of the things that are impacting the market in the future in terms of new technology. This is relevant. This just shows you the profit for producing gasoline versus diesel. So anything above the line there is when diesel is more profitable to produce in a refinery than gasoline. And if you go back to 2015 and many, many years before that, you can see that diesel was very much the refined product of choice for refineries. And, you know, from sort of 2015 to middle part of last year, gasoline, where below that line you see the red, returned to the fore as a refined product of choice for European refiners, for Israeli refiners as well. And that's, as I said, in part because crude prices fell very quickly. And in America, unlike Israel, which I heard earlier had roughly 75%, I think, of the price of gasoline was tax, very similar to the UK, 70-75%. In America, there's practically no tax on gasoline. So when crude prices fall, the price at the pump falls very, very quickly. So that's why you had, in part, this big boost for gasoline margins, because demand for petrol, demand for gasoline in America in 2015, 2016 was at record levels because of the very, very low outright price, and now as well the growth in the economy in America as well. But the last few months, perhaps a slightly different story, is diesel, gas oil has returned to the fore to some extent. So now really looking at the future, and we've really only touched upon it in previous presentations about what are some of the disruptive technologies in the oil market in the years to come. And this gives you an insight at least into some of the areas of the oil market most at risk from disruptive technology. So on the left there you'll see the sectors and global oil demand in various sectors, and you can see there roughly 60% on the left of that graph, 60% of oil demand made up of transport demand, about 25% passenger vehicle demand. And on the right there, you can see, again, the types of transport demand that exist in the oil market. And again, it's been touched upon, but you know, around the world at least, I think, you know, reporting on these markets, in the last year, there doesn't seem to have been a week or at least a couple of weeks that have gone by without a major country around Europe issuing a statement, a very long-term statement, but a statement nonetheless about phasing out gasoline and diesel cars at a specific time in the future. You see there France, the UK, Norway, Germany, China, which we'll touch upon in a little bit of detail. This is a long way ahead, of course, and these are just headlines, but it appears that this is the reality. It's just a question of time as to when these changes will start to have an impact on the global oil market. We heard, I think, the Minister of Energy earlier talking about passenger vehicles here. I think if I heard correctly, and maybe it's not news, but maybe old news, about potentially a ban by 2030 on diesel and gasoline imported cars into Israel. So happening here as well. And I like this slide. This talks about the potential, at least, for how technology disrupts. On the left here, you'll see, the left and the right, you'll see the same picture, 13 years apart here in America. This is the Easter parade in New York. 1900 there on the left, only one car. 1913 on the right, only one horse. So the same picture 13 years apart. And I'm not here to say that in 13 years you'll have, well, it wouldn't quite look as different as that, because an electric car doesn't look massively different, if at all different, from a conventional car. But it shows how technology can disrupt markets. So what's happening in oil, and we'll have some data on some of the countries around the world, but these are just some of the implications or some of the things that are happening in the markets right now, at least, in terms of disrupting some of the balances. In Europe, at least, unlike Israel, largely at least, Europe has historically been wedded towards diesel cars, and in the last 2 or 3 years, that has shifted hugely away from diesel and back towards gasoline. So in UK, I think diesel cars were down, sales were down 25% last year in the UK, and gasoline car sales rose. So there are big changes afoot in terms of consumer patterns across Europe. Now, I would stress that diesel is very much a European phenomenon when it comes to cars. If you go to Africa, the US, Asia, the bulk of car fleets there are all gasoline. So not necessarily a change as substantial as it may seem at first sight. And in terms of EVs, so EV, electric vehicles, it is very much in its infancy, and right now, at least, there is no real impact in terms on the oil market from the uptake of electric vehicles. We see there 1 million electric vehicle sales equating to 30,000 barrels a day of oil substitution. There was about 1 million electric vehicles sold globally last year. But, referring to that previous slide, the uptake of new technology, if we look through history, it's frequently underestimated how quick new technology, mobile phones, smartphones, how quickly that has evolved and changed the patterns of consumers. Last few slides, this shows where we are with electric vehicles now. Quite a lot of detail here, but on the left there you'll see the growth in electric vehicles. I said 2017, that's about 1.2 million electric vehicles sold. That's an increase of nearly 60% year on year. China in particular, more than 70% increase in electric vehicle sales in China last year. Similar in the UK and in Germany as well. There are some countries now across Europe that have really reached what I would call the tipping point, when the electric vehicle is no longer a niche product that has become accepted by the population. It was referred to earlier, Norway, an example. Now, Norway is a very special country in many ways. And electric vehicles are very heavily subsidized in Norway as well. But last year, 40% of new cars that were sold in Norway were plug-in electric vehicles, not sort of conventional hybrid engines, but plug-in electric vehicles. But you can see on the right what that equates to now, and I think it should be a small red bar there for electric vehicle sales. But as I said, roughly speaking, no more than 1% of total sales last year were electric, and compared to the fleet as a whole, it's very, very marginal, at least, the impact right now. But this is our forecast as a company, at least. We have some sort of various forecasts, and I think it's almost impossible to make forecasts, especially of a technology such as this. But this is what we're seeing in the dotted line, at least here, in terms of where electric vehicles play a part in the future. And our sort of reference case there is around 20% of new cars sold by 2040 to be electric globally. That's our reference case, but a huge range. You can see it being from the niche market at the bottom to the car of choice. And when it's the car of choice, you're looking at more like 35, 40% of new cars by 2040 being electric. Now Israel is lagging somewhat in terms of its uptake of electric vehicles. Infrastructure is really the key across Europe, and they said Norway, it's very much the key, and in the UK there's a huge investment right now into charging infrastructure for electric vehicles. I read last week, I think it was, the parliament here in Israel, a study into electric vehicles. There's only less than 1,000 plug-in electric vehicles on the road in Israel, so lagging some of its European counterparts, but again, infrastructure very much the key. So what does this mean? The last slide really. This just really gives what electric vehicles and this new technology could mean for oil demand in the future. In Platz's view, at least, our reference case there, 2040, you can see actually, even with that huge uptake of electric vehicles, 25% of new cars by 2040, doesn't really have a huge impact on oil demand because the car fleet is expected to double in the next 20 years globally. But if we took an aggressive case where there is a huge uptake of electric vehicles, you can see that the impact on oil demand is fairly substantial. It still is higher than today, but maybe 5-7 million barrels a day less than in the reference case. So just finally, I guess, I said that new technology and it can be hugely underestimated in terms of how quickly it is taken up. And if you look at all of the bodies, the OPECs, the IEAs, the EIAs, in the last year or two, all of them have pretty much doubled just in a year their expectations for electric vehicle uptake in the next 10 to 20 years. Talk about mobile phones. This is my last point on this subject. In 1980, Motorola, who pretty much invented the mobile phone, or some of the technology that went into the mobile phone. But in 1980, the mobile phone was very much in its infancy. And they gave an estimate of what they thought would be the uptake of mobile phones in America in the year 2000. So from 1980 to 2000. Their estimate in the year 2000 was 260,000 mobile phones would be in America. It was 110 million. I mean, I'm not suggesting it's necessarily the same. Mobile phones, electric cars, and electric cars are certainly further forward there now than mobile phones were in 1980. But I think we should not underestimate this technology at its peril, and it could be a change on the horizon for the global oil markets, and also, of course, here in Israel. And that's all I had to say. Thank you very much for your time. Happy to talk to anyone or answer any questions in the break.